Alright guys, welcome back to Lean Divergences. Today's Friday, November 12th. The week has come to an end. In this video, I am outlining exactly what this week's move in the S&P tells us about the overall potential for the market moving forward, and trust me, you will like it. I want to make this a quick video because it's the weekend and I will have a ton of videos on Sunday, so make sure you subscribe and like this video if you like what I am about to tell you. So, we have been watching the S&P 500 in this current trend and comparing it to previous analogs. So there are two specific analogs that we've been comparing it to. And these are analogs that were characterized by major thrusts in the market after periods of relative correction, right? So here we had a period of relative correction. I mean, you can say that we corrected all the way back to down here because this was the low, right? And just draw a line back to where we corrected to. Same thing can kind of be said for this move here. Through this correction, we had like a 2-month sort of period pullback before a move higher, 2-month period pullback before a move higher. And then similar to this one here, post-election, we had a rather material pullback more than 2 months. But after that, we had these thrusts. And so we've been asking ourselves, okay, well, this could be a similar thrust to what we had here. What can we expect moving forward? Now, we have been operating under the assumption that we are going to repeat here in this analog, we are going to repeat this to some extent, or this to some extent, right? We're looking at them. But in my Monday video, I not only pointed out the potential for some pullback, as the title here suggests, but I also wanted to discuss how we may have a rally that is too far and we may cut through these supporting moving averages, which would be similar to what we had here and here. Well, we did have a pullback on Tuesday and Wednesday, but then we held and recovered. So this means really one thing, that we should assume that we are in fact in a rally that is more similar to these analogs here, these thrust analogs, so this one here and this one here, than we are to the blow-off tops here. And you can go back to the previous video and, look at the reasons that I outlined that we were not in a situation like this. And I think that they were pretty clear. So what does this all mean? The quick answer is that this market has had a minor pullback, or a dip, as I referred to it in the title of the Wednesday video that I put out. And I have to say, it looks like we will continue on. But in this video, I want to quickly outline objectively what we can reasonably expect in terms of relative parameters moving forward. So this 1-day pullback, a 2-day pullback actually, I want to say it's 2-day pullback, was good because it puts us in a similar position specifically to this analog here. I'm going to ignore the previous analog, which was from almost exactly a year ago, and just focus on this one because of the similarities. And one of the main reasons is if you take a look at this DMI indicator here, you can see that we've done basically here what we did here. So we had this green line. So focus on this green line here. See this one here? I'm going to try to highlight it here, this green line where my mouse is. It came down all the way to this extreme reading level in the analog here, but even in this one, we came down to this extreme reading level. Go back to my Monday video. I talked about how we were very overbought at an extreme level, and so we should expect some sort of move back because that's exactly what we had every single time we got down here in the technical indicator, right? So we can see that here, before the pullback, green was down here and here as well. Now let's take a bit of a closer look here because I want to show something that's actually very interesting. We had the green at the extreme level here, and what happened? We had a red day that was negative, and then another red day that was negative before we had a green day, right? And look, it came down to this orange. This is the 10-day moving average. Well, look at what happened this time around, guys. We had a red day, right? And then we had another red day coming down to the orange 10-day moving average before we had a recovery. Now, it wasn't exactly the same. Obviously, we had a little day here where we had to kind of gather our forces, but we did basically the same thing. And this is, again, why I want to emphasize how important technical analysis is, because it can give you such strength and confidence in this market to understand what's going to happen and not have any fear. Like, I cannot emphasize this enough, guys. I'm not selling any system or anything. I'm just trying to tell you that this is something that you are capable of doing on your own if you put in the work. I've got a full-time job, right? I run a small business. So I still have time to do this. And I think that even if you're a student or if you're, just starting out in your career, you have time to develop this skill. So sorry for getting off topic, but I mean, this is really the core of why I do this, why I started this YouTube channel, and why I put out these videos for free, because I just want other people to understand what's going on here. So back to talking about this, look, what basically this shows is that we are mirroring this analog pretty well. Now I want to make this video quick because I have a ton of trade ideas that I need to prepare for you for next week, but there are a number of important things to point out. So first, let's assume that we do get a repeat of this analog, right? So far, so good, right? Everything has been repeating generally as we expected. So far, so good. What that would mean is that where we are right now is basically over here, right? That's where we would be. So what does this tell us? Well, I mean, just look at this. After this point here in this analog, we had relatively limited immediate upside and lots of volatility. Also note that 3 weeks later, we were below that point, right? And I mean, if you want to go extreme, 2 months later, we had hit that point, right? You can see if you go all the way across, you come right here. So you have to manage expectations about the S&P 500 moving forward if you are following the analog, or at least this specific one, which I'm going to be focusing on, I think, from now on with regards to my overall analysis. Now, remember that we did talk explicitly about this rally touching the 10-day moving average numerous times before a pullback based on the analog, and even touching this, because that's what happened here. You can see really scraping this 10, and then even touching the 20. You can see it touched it here on this day and then here on this day. So that would mean, coming down to here, obviously not right now, but at some point. Right now, that is if we do have a perfect analog. And remember, markets do not repeat, but they do rhyme. And I hope that this is pretty clear based on just what I'm showing you on these analogs, right? And that's the reason why I use and continue to use technical analysis analogs, because they work. Now, that said, I do not get married to analogs, as markets can do a lot more than you think they can. They deviate quite a lot. But what I'm trying to get at here is that an analog is a good guidepost, but should not be treated as gospel, even if the analogs have worked many times in the past. Do not get married to these ideas, guys. So right now, I think we have a nice small dip after a relentless rally here. And it looks like this rally is resuming, even if I would guess that it would be more volatile moving forward than we have experienced in this initial thrust, right? Remember, this thrust came from this pattern construction, this inverted head and shoulders pattern, really bullish. Do we have a really bullish constructive pattern here? No. We're in the middle of this thrust and we're kind of continuing higher. We had a pullback. This wasn't a fatal pullback. It just came down to here. We supported, and we're going to continue to grind higher. And I do mean grind higher because I do think that we are at this sort of stage, right over here. Which means I would say limited trading potential in the S&P specifically. But I think that we can see some interesting opportunities in other stocks, and that's why I'm kind of focusing on those ones. So I will be putting out some videos over the weekend, probably Sunday morning or afternoon, as I usually do. So make sure that you subscribe if this is the type of technical analysis you're interested in. And as always, comment on stocks that you're interested in, or point out things where I'm wrong, because look, I'm wrong from time to time. Everybody's wrong from time to time, and what you want to do is you want to make sure that you're not married to this idea that you're right and get your ego involved. And that's one of the reasons why I do this, because you guys do keep me honest, and I appreciate this little community that we have. Anyways, thanks for watching, guys. I'll see you either Sunday or Monday. Take care.